All right, so today is November 22nd, 2021. I did a recap earlier, but I thought I'd do a review of what is actually going on in the E-mini right now, just based around how it's been trading over the last, at least the last session. Um, okay, just before I do that, I just want to check something. Okay, I see what that is. All right, so I'm going to look at essentially what has been happening. I think I mentioned before we have this spike and we have this sort of mini channel, so we're getting reversals. Wedges are beginning to lead to reversals. We're getting sort of up, big down. So we're getting a lot of trading range price action. Um, and this was essentially a buy climax today. Um, and something I should have anticipated when I traded this. I actually traded on my sim account today, only because, like I said, I was very tired um, initially. But there were a few things today that, I mean, I didn't really follow the whole market from beginning to end like I did over here on Friday. Today was slightly different, although we had massive ranges in price action. I wasn't even sure that we would actually get to where we did, even though I did set up for a measured move, and that actually did work out. But just to kind of do a short review on what is actually happening, you can actually see based on the 4-hour chart, we are slowly losing momentum from this massive spike. So we have a spike and then we have a pullback and now we have a channel. This channel could keep going, or it could even just be three pushes and they sort of come back down, maybe test this level. But you know, that's what seems to be happening here. We have little sort of a run here, double top, and a run down, three pushes down, 1, 2, 3, and that's sort of set the tone for this channel, because now we have a high, we have a low here. So just kind of plot that, and then we just kind of been sort of chugging on to the next. This is the bull breakout through this moving average. On this is a 40-minute chart, but 40-minute 4-hour chart, bull breakout through not just this moving average, I presume many other moving averages as well. Pullback, actually it's finding support on the moving average, and that is interesting. So yeah, bull breakout, pullback, another bull breakout, pullback, another bull breakout, pullback. Really, this is a double top, but again, it's a buy climax at the open. And this is something that I should have seen today. I thought, well, we had a strong open, but I was looking at the 5 minute. I always have to remember that you're looking at the 5 minute. Had a strong open and then pulled back and then retraced and came back down, and it looks like we're going lower. And essentially what we expect anyway. We're expecting this move now because we've done the bull leg here, which is a bit slow. Here we have a bear leg and a bear retracement. So we should have like a pull, more selling than buying, maybe even more red. If we look at this on the daily chart, I think we have more red. We had 2 red days there. So this is the daily chart. This is obviously with pre-market on, because obviously 24-hour market. So you have red, and then bull, red, blue, green, red, green, 3, 1, 2, 3, and then red, red. And then we should probably have one more big red, I assume, maybe tomorrow, over the next couple of days, or overnight. All right, so that was just how that happened. Now, if we look at how the day actually traded, I mean, this is the 5 minute chart. We are in a trading range of sorts. I mean, I'm looking at the way the price action does look. If we pull back a bit, this area is here. Yeah, if we pull back even further, I can't seem to get any more on the chart. Yeah, we're in a broad bull channel, and in broad bull channels, you buy in this region and you start to sell in this region. Yeah, so looking at how we have how price has sold, I'm looking at the 2060. I'm actually now thinking it's probably even worth putting in the 2240, which is this moving average. Actually, you know what? Let me just do that now. Multi-time frame, moving average, and let's make this based on the 4-hour chart. And we're going to make it light gray. Just give it maybe a transparency of that, because I don't want it to be too distracting. Alright, so there we go. Alright, so you can see we're finding support here, finding support there. Didn't really find any support over here, but that's actually what's interesting here. We broke out, but then we retraced it. We had this really big recovery, so found support here, pulled back, and kind of been in another trading range. So probably another moving average supporting us over here. Let me see, maybe it's the daily. Okay, so no, the daily is too far, so it's definitely not the daily. Alright, so maybe it's something else. Doesn't matter. I mean, there is support from this level, but I know that whenever you have a moving average at a level that is supporting, that's in confluence with a support level, it gives you even more conviction for traders who are using moving averages. But anyway, so and you can see we kind of found support on this moving average over here. Here, right. So this is what's happened today. So today, I looked at this when we. Sometimes I find that whenever I take the after hours out of the Globex chart, I can make some better trading decisions. So huge gap up, right? 3 bull bars, at least 3. One's big. So this is always in long at this point. And I actually went long here at the close of this bar. Put the stop down here, went for 10 points, and got out around here, because this was about 10 from there to about there. Yeah. So that was the actual trade, which worked out pretty well based on the conviction of that. What I did not expect was this, at least looking at this chart. But it's something this is the reason why I'm doing this review. The fact that this can happen when you have such a strong bull trend, 7 consecutive bull bars, and then just 1 bear bar. Generally, I've noticed once you have 7 consecutive bull bars, you always have a bear bar. But this is interesting because on the monthly chart, we've had this situation before, and then this, and then we've carried on. But this can also happen. So I think it's interesting seeing that. Here we have tail at the top, bear bars. So now we're having bear stepping in, bear stepping in. Now we're having a double top, bear bar, bear bar. And I think at this point, one has to now assume the market is always in short, and definitely in the trading range here. Then you have a bear breakout, and then you're now going down. Now holding on to the moving average. Now what I want to see is how this looks on the other chart with the Globex data off. Alright, so price was below the moving average on this chart because obviously you're using a different set number of bars. But then you still have the bear breakout on the other chart, the price is above, and then you have another breakout through this range. I think having this breakout tells you you're certainly always in short, and then seeing these 2 bear bars breaking this low, and I remember I actually took a long here, put my stop here, and then got hit, and that's when I now put this measured move there. I was like, well, if we've sold here, we're probably going to end up coming down here based on this short area, based on this height. Essentially what that means is we've gone up one range, come down, and now we are probably going to end up down here. And that's exactly what happened. You had a wedge, you had a double bottom here, price retraced up, pulled back, and then you now have another trading range over here, bull breakout, and then you now have this wedge, 1, 2, and 3. That's the way I've seen it. Even though our Al has a different view on this. Al sees it as 1, 2, 3, I believe. But I'm looking at, if I was looking at this on a much high time frame, so let's say the 30-minute time frame, I can see 1, 2, and 3, right? So kind of seeing things from sort of things a lot slower can help you make those sort of decisions. At the time trading it, I was always in short, and therefore even when this came down, I remember saying, okay, we have 1 pullback, 2 pullback, 3. So this obviously triggered this part. I'm actually going to take these moving averages out because they're distracting. So let's hide this study and hide this study. I wish there was another way we could just have buttons here that, I mean, you could just program them if I want. All right, so yeah, here we go. 1 pullback, 2 pullback, 3. So this is a good short. You could have taken it short from here. 1, 2. Yeah, you didn't even get the third leg down. That just tells you how strong this bull trend was relative to this bear leg. But this in itself was a large bull leg. You are definitely, from this alone, even if you got in short here and you saw this bull bar, I mean, you could have just gotten out because, as you can see, you're not really getting very far. The bulls are in control. Limit order bulls are buying the lows here. As you can see, they bought this low, they bought this low, and they pushed this up. So here you have a high 1, and then what was the next time you had a high 2? This looks like a high 2 here. No, this is different. This is a bear leg. This is a high 2 here. A high probability buy here. Yeah, this is a high 2. It's a high 1, it's a high 2. So lots of bulls bought this, and you have this final leg. So there have been some opportunities here. I think, yeah, this is definitely a high 2 because it has broken the top of the range. This is a high 1. There isn't any other bull bar that has gone above that. Actually, are these high 1s, high 2s as well? Because if this is a high 1, this is a high 1 signal bar, so this is a high 1. And then but this did not go below this, did not go below this, so you do not have, these aren't high 2s. This is the first bar that has gone below any bar. Or did this go below? It looks like this went below. Where is it? Yes, this went below. But then again, it's an outside bar because it is above as well. So I'm not going to count that one because then that would be a high 2. But that's an outside bar. This is not above this bar. Neither is this is above this bar. So maybe this is a high 2 signal bar. So you buy above this bar. But then this is the high 2 itself, because now you've gone below, and now the next bar after this bar that has gone above, I think was a high 3. I have to go read my bar counts. But anyway, so that's what happened here. So that was another entry. This was definitely a good entry long. So you could buy above this bar. Over here you'd have gotten filled. And then this kind of gave you a really good entry for a good long trade. I wonder how many points you got there. 8 points. Oh wow, 10 points. It was very achievable here as well. Okay, and then you had this triggered, and this is something you would look out for because now you do have this wedge. Something you always have to keep an eye out on, because sometimes I forget it. It happened when I was trading the NQ. We had a wedge at the top, but I was just not focused. So we have a wedge, first bear bar closing below this, and this closed on its low. So this is always in short at this point. You could have shorted this bar, taken it short here, 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 and then momentum picked up. Now what do we have? We have a situation where we then now pull back, 3 pushes up, 1 pull back, double bottom, 2 pull back, 3 very weak follow through, wedge top, and then we change directions. So here we went 1 pull back, 2 pull back, 3. I marked the demand region over here. Now this is something I was thinking about. just before I started this recording and what really prompted me to make this recording of a bear pullback channel. So, but we look like we are in a trading range of sorts. So if this is a first pullback and then we're channeling down, it looks like we're going to do it in a very, very slow manner. So I reckon we would I'm going to see how this is going to work out. I'm really interested to see how this plays out. So 1 pullback, 2 pullback. So it's any guesses whether we go up or we go down at this point. But as you can see, we have bear breakout, 3 pushes down and 3 legs down or 3 bars down, testing this support, but it is a lower low, pulling back. And let's see whether we do get back to the top or whether we, yeah, this would be interesting. And I think that's the other thing. What happens at the moving average? Now, another thing I want to bring into this review is how I actually do trade around the moving average or use the moving average. Yes, of course, this is not desirable trading. Although I would trade this. So I guess this isn't too bad. What is the range? 4 points. Not easy to trade this. You have a setup here for a long entry. Didn't even do that. Let's use the right remove. Let's use the right tool. So you have a setup for a long entry here. You could have gone long over here. Let's just zoom in. Yeah, you could have gone long here, risking just about 4 points, 3.5 points. 1 pullback, 2 pullback, 3. No trigger for a short. So you could have just stayed in and you're above the moving average. Always have to remember that you're above the moving average. I always forget the moving average. And then the moment you touched it, bulls bought this. Limit order bulls bought it. Went even higher. They now had double top here. I'm just going to put this here just to kind of show what actually happened there. Alright, so the moment this happened, you know, I had a double top here. Very strong sell. Probably had a low 2. So let's see. This was the first. This is a low 1. Pull back. This is a low 2. This is a low 2 here or here. This one is a low 2. And then you had 1 pullback. Bear breakout. Obviously through a moving average. And also through this range. And then, what then did you have? You had a double bottom. When we have a double bottom like this, usually a sign of a reversal. Bull. So anyway, trading range here. Now you're above this. So this is a high 1 here. This is a high 2. High probability buy on a high 2. So 1 pullback, 2 pullback, 3. So this is a double top. I'm assuming. Nope. And then we went down, but we still are within the channel, but trading around the moving average. We could have traded this actually, as long as you kept within this range. It's a 4-point range, is a very small range. You would have to be scalping, in which case you become a limit order bull or limit order bull or limit order bear. You are on a bull trend because moving average is tilting up, so chances are you would be, the higher probabilities are in the bull case by climax of here, because you have broken the channel, which leads to a profit taking and a nice sell-off. As you can see here, a good short below this bar, it would have been filled over here. Nice one here. So 1 leg pullback, 2 pullback, 3 wedge bottom. And this started the day. Now this is what kind of confused me, this part. But of course, this happened. What happens here is always slightly, can always change how you're seeing what's happening here. So for instance, now you have this. You don't really have a double bottom, do you? This could be regarded as 1 leg up, even though you might say this is a pullback, but really this is 1 leg pullback, 2 leg. You did have a wedge up here. 1 pullback, 2 pullback. No, you didn't get a wedge. You had a double top. Actually, if I look at Al's notes, I'm trying to. Here we go. He did put a wedge in his. So he has on this bar 1, 2, 3. Kind of makes sense because this doji could be counted as, on mine it's not really a doji, it's a bull bar, but he has this as his wedge. I've never really looked at that. So 1, it's not really a pullback, is it? Well, 2, pullback, 3, but it was a pullback. Anyway, that's by the by. So you now have this double top, and then you now have a bear channel forming inside bar here. I'm looking at his notes over here. He's marked the inside bar, so it's a breakout pattern. Anything from here or here, it's a breakout. Actually, inside outside. So so it's an OIO, and then now you have a breakout down or breakdown, pullback. You could call this a wedge if you want to. 1, 2, 3, and then you now have a sell off, and you could sell the low of these bars. Whew. So much concentration. Double top bear flag here, yeah, of course. Yeah, there was a double top here, and it was a bear flag. All right, so bear breakout. This definitely good short here, stop down there, or even stop here. Aiming for more of this. I think one should be comfortable taking this low. As a rule, especially when you're looking at this chart, you will kind of see what's going on. This should really be, hang on, let me see. Yeah, I should really put this on the 1 hour, just to kind of make things a bit clearer. But then now this kind of tells me something. All right, now this is interesting. But then you now have that channel that I was talking about that's forming. Oh, there we go. We definitely have support over here. Yeah, we definitely have support over here, and not so much because we have a demand region, but really just because this is support pushing here. Let's see what happens here. I don't want to say doubt, but let's just see what happens when we get here. 1, this is a trading range, so the first leg up, lots of buying, broken the moving average, always in long at this point. Yeah, I will come back and look at this market maybe around when I wake up in the middle of the night, just to get a good sense of what really is going on. Here we have 1, 2, 3, no, 1, 2, 3, obviously, good buy over here. So yeah, the thing is, in terms of trading any stock or even anything, one needs to really figure out what the market is doing, where the buyers most likely will be, where the high probability areas are. Because I find that you just can't take any trades anywhere, because you could just say, okay, I'm going to take a long here. Where are you going to put your stop? There, and then you just get stopped out. Or you're going to put your stop here. You really need to understand what's going on. We made a new low. That's definitely going to get bought. How did we know this was not going to be a massive breakdown like we did over here? We don't, but we can always bet that at least we know that the momentum has slowed down. We have a pullback, and then look at the bear leg. It's also not as impressive as this. Obviously the volume is lower. Yeah, not as impressive as this. So chances are we'll probably get a reversal on a new low around about there. This will probably come back up to test somewhere around this region. Now it's a broad bear channel. You always start to sell around the this area, so just maybe a few, maybe 70% or 25% down or 20% down from here, and you'd buy 20% on the other side. You have a higher chance of doing that. Yeah, and then also just looking to see what tails are there, are present. There aren't many tails there. There were lots of tails here because there's a lot of scalping here, lots of indecision, double bottom but higher low, major trend reversal. And I think even in Al's notes he didn't actually write very much in it. Yeah, higher low, double bottom after sell climax. So higher low, double bottom after a sell climax. One could definitely take this long here. Wasn't looking at it this morning that way, but I remember I did see this. I saw this as the wedge here. I wonder why he has a parabolic wedge all the way up here. My parabolic wedge was here because this is 1, 2, and 3. And then this nice sell-off as a result of that. Very, very small sell-off. But then he has the same thing here. Inside, okay, outside, outside, inside, inside, outside. Yeah, it's very, very, very interesting. Obviously, one has to find those opportunities. In my own way of trading recently, at least when I'm trading the E-mini, I'm finding now that I'm getting more comfortable with how to place trades, how to get myself out of trouble, how to trade this region compared to, say, this region. Al makes a very good point that the 70%, I mean, this is a different day, but on most days, 80%, is it 90% of the bars on the chart are in a range. So you can make money in any direction on most days. The rest 10% are in a breakout like this or like this. This is actually a breakout here. But today just had breakouts galore. One here, one here, one here. So you have 1, 2, 3, 4. I mean, you could count this as a breakout if you want, but I'll just say 5 because this looks like a range for me. 6 breakouts. So you could have just made money in any direction just by, like I did here, where I just jumped in on here, and you can make money here. After 3 bear bars, just jumping on here, you make money here. You know, even here, you make money here. You know, it's here you have 2 bear bars, you can make money there. Here again, make money there, or even here, 3 bear bars, make money there. So whenever you have a breakout, Al is right. You just have to buy in the direction of the breakout. Obviously here the volatility is low, so you're better off just trading wedges in this type of market, and just really looking for opportunity. Here's a breakout. Probably just take a short here, make some money down here. You probably get stopped out here, but this is the bottom of the range. Lots of selling here. Looks like exhaustion. Not a good place to buy. Definitely buying this high if you want to. If you're already here, there's a good buy. Put your stop here or the bottom of the breakout. High probability going up. Possibly going to come down for a test of the bottom, but looks like we are in a trading range of sorts. So I was definitely right in that you can make money in any direction when you're in this sort of they call it shop, but then when you're trading breakouts like this, you will make money only in the direction of the breakout. All right, so that is my review of trading. Maybe what I should have done is kind of looked at this maybe bar by bar. So if we pull back and just look at how we could have traded each one as the bars were forming, that could have also been cool. That I think would be, it's always harder to do, but you have to read each bar, and that is always challenging because when you're in the trade, you have to be so objective as to not get emotional. When you're out of the trade, it's easier to read. And I think that is my next goal, to look at each one, even as I know where it's going, but as I click bar by bar, I am now asking more questions like, okay, we have a bear breakout there, 2 bear bars closing on its low, possibly take a short down there maybe, right? And then you get one there, but then my mind would say, oh, but what if this is a wedge? But that's the point. You just have to hold on to it. Low, high probability sell there, and look at that. You held, and you would have at least gotten to the moving average, broken through that moving average, first bull bar, then a bear bar, indecision. Now you have a spike, pullback, and channel. 1, 2, 3. I will probably get out here. Yeah, I'll probably look to get out here. But then you have a bear breakout, and then I would look to sell this because this tells me we're going down. Perfect, even better. We've tested this low. At this point, I am looking for a measured move, um, but one shouldn't exit, right? Why? Because you need a wick. I don't know. It's hard. It's very challenging because they're buyers here. I mean, look at this. So you expect price to retrace at some point. So, um, and as you can see, we did get a retracement, a double bottom, higher, low, major trend reversal, but you can already see. I remember there was a sell opportunity around here, and I can't remember why. I think it was because on a lower time frame there was, if we put this on that, was it the 2 minute? It looked like there was you could have looked at supply from that time frame. Yeah, because of this. So the first one was, yeah, it was just this area was an area of agreement, and that was a great place for a pullback just here and here. So whoever would have shorted here, or was it bought here? Hang on, whoever bought here and has held is bought some more and is getting out there. So that's what's happening there, on the 2 minute chart. I think I was looking at the 2 minute just to get a good sense of what was going on. Where are we? So right, so there's some things I need to work on, and that is one of them. Just being comfortable to look at each bar and staying in a trade whilst everything is happening. Usually I jump out, um, just in case I get a massive breakout, but you don't normally have this V. It's very uncommon, and if you do get a V like this, it's because you've had a wedge, and you can see it's been building up to it, and you had this bull breakout, and then look at where it happened at the double top over here, and then do this good sell. It's what you'd be looking for, because this is a great area of agreement, and then bow, 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 and then sell off for the rest of today, the last day part of the day. So this day actually had four parts. You had a bull trend at the open, then you had a bear trend in the middle, and then you now had a bull sort of trading range bull trend, and then finally we had this, bear trend, this sell-off. All right, so that is the review. We'll see how we do tomorrow.